just focus on one deal at a time and focus on, the fact that if you're going to wait and try to get commissions and then fund your real estate deals, it's such a long road. And I've tried it, partners, LP partners, if you're going to want to grow in commercial real estate, it's a fundamental aspect of the business. You're going to have to get through that immediately and start the process and work on that process of raising money, no matter who it is. The more money you can put in, the better. Makes me feel better if you were to.
All right, what's going on, everybody? I have a special guest today. We have Jeremiah Boucher. He's a commercial real estate investor, commercial real estate developer, and also author. How you doing today?
Doing well. Thanks for having me, guys.
Yeah, thanks so much for joining us. So give us a little backstory, just how you got into real estate, what you guys are investing in right now, but mostly just how did you get into commercial real estate? Because it's not an easy industry to break into.
Yeah, I like sharing with guys like you, young, hungry. I'm 43 now, so I've been in it 20 plus years, quit college. My dad has a paving company, so my parents split up. So my dad lives in the East Coast. My mom's here on the West Coast in Vegas. And I grew up paving, and I realized I didn't want to pave my whole life, and that is not a fun profession at all. So I had to find another path, and got into. I didn't like college. Quit college. Got into real estate, and then lost it all in 07, 08. That was a tough time. I don't know if you guys. How old are you guys?
I'm 29.
I'm 26.
Yeah, so I think you were in diapers then,
Yeah.
But you were
not quite
little guys.
Yeah.
Yeah. So that was a tough time. So it's funny where people forget what happened there. But when the market crashed, it took down a lot of real estate people, and I realized I didn't have an edge at that point. I was buying houses like everybody else. I was trying to flip houses. I was in Vegas. 1 million people are realtors. We're seeing it again. Everybody's in the industry. So, that ultimately speaks, Graham, to the book I wrote, Finding Your Edge, and how to win at the game of commercial real estate, because I knew, and deep down, I didn't like even doing residential real estate. I didn't like dealing with the buyers. I didn't like open houses, none of that. So for me, it was all about finding something I could express myself creatively. I could grow and build something that has real wealth over my entire lifetime. And, where we met at Commercial Academy, I was exposed to, Scott Scheel through a wealth, I think it was like a Donald Trump wealth seminar in LA. And that's where it really clicked, where in 05, 06, I already could see the writing on the wall where I'm like, this house flipping game, this realtor game is not the one I want to play. So commercial real estate was really the game I wanted to be in for a lot of reasons I wrote in the book, but the reasons that you guys are in it as well now. So I think, there's a lot to go through on that, and I can go a lot of different directions, but ultimately I found my niche originally in manufactured housing. So it was an asset class that was a lot different than at the time that a lot of other investors didn't want to buy, nor did they even know about. And banks actually at the time didn't even like that type of asset class. About 5 to 10 years earlier than the economic crash, there was a crash in the mobile home financing world where the same exact thing happened, where anyone that had a pulse could get a mobile home loan. And, what do you know? Fast forward, there was a ton of defaults, and the industry was really frustrated, the lending industry, with mobile homes, and in turn, mobile home parks. And that shift has completely changed. In 2024, today, they are a very attractive asset. They're not appealing the way they look, many of them, but the way that they cash flow. So mobile homes was really the way that I went in terms of prospecting and trying to acquire mobile home parks, and then ended up getting into storage facilities about 7-8 years ago due to just learning from some of these owners that were selling me parks or working with my partners and I. And they had a few storage facilities that that they didn't want to own, they didn't want to manage. I was really attracted to all the different tenants and the lower CapEx, where you don't have to improve the assets so much and deal with toilets and deal with domestic violence and deal with dogs and all the other things we deal with parks. That I segued in the storage industry, and then ultimately about 3, 4 years ago. ended up getting into what you guys are getting into there is more of the industrial warehouses. And just due to the fact that our storage tenants were starting to run businesses out of our storage units, and it was packed with, landscaping materials and their supplies and roofing supplies. And we needed to find space for these guys that they could work out of. And obviously you can't run a business out of a storage unit that well. So that's what ultimately led me to the small bay industrial.
Awesome. So you started in residential real estate. We're flipping houses. You were also a realtor, which I didn't know that. That's awesome. And then you transitioned to commercial real estate. And something I was going to ask you was something, we met, like you said, we met in Commercial Academy. Were you already investing in commercial real estate prior to Commercial Academy, or did you go to that event and then start investing in it?
Yeah, I had no idea what a cap rate was. I had no idea what cash on cash was. I had no idea what a partnership in terms of an operating agreement. I knew nothing, zero, when I went to Commercial Academy.
And how big of an impact for people who aren't listening, Commercial Academy it's a mastermind group or educational program, and then a mastermind group of a lot of people like Jeremiah who are, GPs and then also LPs. But how big of an impact did that make in your commercial real estate career?
I mean, looking back, I'm sure I would have learned it somehow, but it was pivotal. It was really critical to understand the fundamentals. You see in the seminar world, people keep showing up and they go to these conferences and you learn a few tips and tricks or ideas or motivation, and then you just keep coming back and things don't change. But in this particular arena or format, as you know, is going, if you have the hunger and desire to want to learn and grow and do the business, it gives you everything you need, and you see it. Like everyone, I think 80-90% of people in there, they're really doing things. They're doing deals, and they are actually involved and engaged in the business. And that's exciting to me that culture was created through that group where it really compels people to take action because it gives you the fundamentals, and then you got to go run with it.
Looking from the outside looking in, we're not a part of Commercial Academy just yet, but my first one was in Raleigh, and it was just mind blowing. And I think the number one thing that I kind of took away from it is, it might be kind of scary to get your first deal or whatnot, but there's so much community there that you can always present it. I know you guys on your Tuesday night calls, you could present any deal at any stage and get feedback. And I think that's really cool. I think the community is huge.
Yeah. It helps elevate your mindset around what's possible. Mm-hmm. That way, when I started, I had to shift my beliefs. Like, I can raise, $500,000 or $1 million. I can go buy an asset that has a class tenant in it, or I can go work with an owner and share owner financing techniques that will help him defer his taxes and be able to spread out that tax liability over time and make it a win-win. So it gives you the confidence and belief, especially when you're seeing other people doing it that are just like you.
Yeah, that's huge. I think that's kind of where we're at now, like thinking, we could buy this deal, but we have to raise $500,000. It's like, I'm not there yet with the mental switch, but I'm working on it. But what's your portfolio? I know you mentioned you were into, flipping and then mobile home parks and now self-storage and industrial, but what's your portfolio look like right now with your company?
Yeah. Throughout the funds and the partnerships and the assets that I bought over the years, it's about 100 properties or so, give or take. About 400 million assets under management, about 120 million in investor capital that we manage. So there's a significant amount out there. About 70% is storage, about 20% mobile home, and a little less than 10% in industrial.
And moving forward, are you trying to keep those same ratios, or what are you targeting right now?
I'm targeting quality, not quantity. I'm sure, as you guys know, right now it's a tough market, and we're entering August of 24. Interest rates are high, as we all know. Deal flow is low. Seller expectations are pretty high, where they think that some don't know the parties. It's over. It's all over, and that they can't get the prices that they want. And then in turn, you can't just buy an asset and jack the rents up because customers, consumers, renters, everyone's feeling the pain of the. I believe we have a recession going on, even if technically we're not. So, I guess to answer the question, it's really about just finding good quality opportunities in the areas that I know the best.
So one of the questions I had was, you kind of talked a little bit about the state of the market currently and with how sellers are wanting these high, crazy prices. I feel like during my prospecting lately, I've just been running into seller after seller who's motivated to sell, like, yeah, well, I'll sell you our property, but they just want a price that's just a little, I wouldn't say they're all out of this world, but it's just high. It's not, it's even sometimes above market. Like, what's your strategy with sellers like that? Are you giving them, seller finance offers and then a lower traditional offer? How do you work with them and not burn the bridge?
Yeah, patience. And it's not a great answer, but when I started out like you guys, I found a partner that was supplying the capital on the deals, and I would either get a fee to buy the property and refer it to his fund, or I would get an equity portion of the deal. And he would get the loan because I had a foreclosure. I had multiple credit card defaults, so I couldn't get a loan. So I would always present seller financing by posing the question, once you know they want to sell, are you thinking of just paying all the taxes and paying all the capital gains, or are you considering, installing the sale or carrying paper over time, taking payments over time? And just seeing where their head is at on that. And sometimes they even would say, no, I don't want to carry, or I don't want to finance. And then they would look at the gains and not realize the amount of impact, right? And then come back and say, well, that actually is not such a bad idea. So yeah, I'll give multiple options. But if they're absolutely dead set, and once you know their motivation, if you know why they're selling, I always use that question, like, it's a real nice property. I'm just curious why you'd want to sell it. And then really listen about what are they trying to achieve. Then you can craft the offer around that. And then it's just about follow-up and persistence. And once you build that trust, because in this day and age, they're getting notified by a million different people, a million different, phone dings that they don't know who to work with. But if you keep having a good attitude over the phone and you come up with fair assumptions and you communicate why you're doing what you're doing, because the property generates this income and this is why the offer is what I created and this is interest rates right now, I think that builds a long-term relationship, and that database, that pipeline is critical for your guys' career, because if you do that year over year over year and you don't bounce around to a lot of different things, that will start to add up and you can't not succeed. Like, it's really hard to do something 4 hours a day and be horrible at it. Like, so after, if you do it every single day, you don't even, your mind won't let you be bad at it. You will be good at it. So that's the discipline that it took for the 10 years when I was turning the ship around after I lost it all.
No, that's good. That. Consistency over a long period of time. We've had a couple guests who just, they hammer home that point. That's key to everything. If you just do something consistently for a long period of time, whether it's cold calling, sending mailers, even posting on social media, you will succeed. Which that leads into one of the questions I have. I follow you on Instagram, and I've seen you've been ramping up your content quite a bit. I'm curious, like, what the reasoning behind. I mean, I'm sure I know, but what the reasoning behind it is, and if you've seen that start to impact your business at all yet.
I mean, I've been trying to ramp my content up for 3 years. And in this arena of real estate, I think what I've learned is, for me, don't get discouraged about views. It doesn't matter how many people watch it. I mean, the fact that you see it is great, because it's the quality of the people watching it, and the quality meaning the people that truly are engaged with the business of real estate. And that's what I'm seeing is shifting, is where I'm getting higher quality interaction when I meet people and when I see people. And for me, I would rather craft my own brand and craft my own personality in the world of brand versus someone else determining what they think I do or what I stand for based on their assessment of a Google search in, random places where I don't have the opportunity to express myself on what or who or what I'm doing.
Yeah, no, that's awesome. We, same thing here. We're we kind of realized that content is massive. So that's why we started this podcast. It gives us good clips, and I've realized the same thing. It's much more about the quality of the people, because I just went from switching over from a business page to a personal page, but I only had 450 followers. But, I just closed a deal last week in brokerage that was a lead completely from social media. And then, Jesse found an off-market deal in North Carolina, and I posted about it yesterday. I was like, "Hey, we have an off-market deal in this city. Is anybody interested?" And I got like 6 messages about it. So it's pretty powerful, even with a small audience. I mean, it's crazy what can be accomplished.
Yeah, it's necessary. It's fundamental.
Mm-hmm.
It's just like cold calling is and was 10 years ago, 20 years ago. Yeah, this is a component of the business that if you don't do it, you get left behind. And this is something that we all have to focus on. But I'm glad that you guys took that step. I think in the beginning, it's really important to share what you're doing, because I'm putting a big focus on deal case studies of things that I've done well and things I haven't done well. And these are unique to me. And as AI gets more advanced, and it's just going to happen so damn fast, the only thing it can't replicate is your personal experience. So my experience of buying a mobile home park 18 years ago and having to rebuild a sewer treatment plant, and in turn, though, working with tenants and working with grant programs, and then and working on improving the community, raising the rents by 35% and making $1 million, in this particular smaller market in the country, like that is my story that nobody can duplicate. So I would continue to reinforce with you guys what you're doing is awesome, because just share your unique experience of the deals you're doing, the deals that you've learned from, the deals that aren't working. Those are the things that people can, they want to follow. They want to see the proof.
Yeah. Thank you for that encouragement. That's kind of, that was at least our thought process. We're documenting like, all right, we're just now starting from going to residential stuff to buying our first commercial deal. Let's put it on a podcast while we're talking to people. I mean, as we speak, like I mentioned, we filmed a podcast with Rich Summers. I'm not sure if you know who that is, but he grew his audience in like 2 years to 250,000 people and a portfolio at, I think, like 75 million assets under management. And he attributes most of his success to his podcast and social media presence. So we're like, let's do that. And and that was like maybe a month ago. And between then and now, we got a deal under contract. And, hopefully in the next couple of episodes, we'll have that deal closed, and then we can share, this is what we learned. This is what we had to go through in the due diligence process. This is how it went down, working on getting a tenant now because we're buying it vacant. So yeah, that exact thought of just documenting what we're doing and letting people know about it is kind of the whole premise behind this podcast. So it's good to hear that you think the same thing. So I appreciate that.
Yeah, I need to follow that advice, and I'm working on it, and it keeps people engaged. That's interesting content, and if in the few followers that we have in the whole scheme of social media. So let's keep it up.
Yeah, thank you. Same to you. One question I had. So like me and Jesse are partners. Building a team. You guys have looking at your website, seems like you have quite a few people working with you. But what would you recommend in the beginning stages of like trying to take down commercial deals? What would be the first couple of people you'd either hire or contract out? How would you go about building a team to scale your commercial real estate portfolio?
Do you have anyone now? Do you guys have any employees?
No.
Okay, good. Yeah. The first thing I would focus on, you guys are out there building the business, right? You're going out and finding the deals, the opportunities, talking to investors. You're the growth aspect of the business, right?
Yeah.
Oh yeah.
So I would quickly find someone administratively that can help organize everything. So they're going to wear a lot of hats, and they're going to be critical to your success. I would say the position is office admin, but it's going to be more maybe past transactional management. So they're going to be someone that's really going to be the office back end for you. I mean, you're going to find quickly as you get a handful of properties and then a handful of investors, just in the beginning, you're going to start to have to focus so much time on organizing files, getting documents signed, making sure leases are completed, making sure to review the financials every quarter. You're going to need someone experienced in real estate that has management experience, that can talk the talk and the lingo, and they're helping you keep it all together.
That's good to know. Are you doing like in-house people, or are you using VAs at all?
I mean, we have 50 plus employees, so we have a lot of in-house people, but VAs are really important. They can help you in this particular role. I wouldn't use a VA. I think a VA is good for your calendar management, for appointments, for content and databasing, all the things that are repetitive tasks. But this particular task, the sooner you can get someone in-house, I'm not saying they need to be in an office and need a lot of overhead, but I would like, if you could have interaction with them, and if they are local, that would be really a big plus. You're going to lean on them a lot. They're going to be, not a partner, but they're going to be on a leadership level where you guys are going to depend on them, and they're going to depend on you. It's a very important relationship.
Yeah, that's great advice. Going back to something you said about investors, I think something I learned in Commercial Academy when we were there in Orlando, Kevin presented. I really enjoyed your presentation, and then also really enjoyed Kevin's presentation. He talked about like lifestyle versus empire. But basically he was saying like, you can build a commercial real estate portfolio that funds your lifestyle, or you can kind of build an empire with a big company and also build a massive portfolio. Two different goals, nothing wrong with either one, but they're very different. So like if we're working on building, a lifestyle where we care more about maybe a smaller portfolio with less headache rather than a massive portfolio and more headache, more management, not saying that that's exactly how it goes, but I guess just more of a lifestyle based portfolio. Would you go about, raising money, or would you try to just make a lot of earned income and then source it into the deals and then just get, maybe one good deal where you could make a $500,000, $1 million profit and then keep a lot of the equity yourself to have a smaller portfolio and less headache? Or how would you go about that? Like in the beginning for somebody new, would you go straight to raising money, or would you try to keep it smaller?
Yeah, it's a good question. And Graham, I would reframe the whole question. I mean, Kevin's in a retirement stage of life, on the coast of Florida. So the way that he frames that question is from, someone in their mid 60s talking about his career. You guys just throw that out the window. There is no such thing as lifestyle business. Like, I don't know what that means. What it means, what I think you need to look at is, what game do I want to play, and how good do I want to be at it? And that's what it's all about. Money is just a result of how good you are at the game of being in the marketplace. So I would look at like it right now, you just need to look 1 year at a time, 1 quarter at a time. So you want to buy an industrial building that's 6,000 square feet that you tie up, you raise money, and then you go lease it. You want to be the best small bay industrial buyer in your market in the next 5 years, or in under this certain size or square footage or whatever it is. Are you great at that game? That's what you need to focus on. What are the lease rates? How do I get the best prospecting done to get the best sellers, structure the best terms? How do I build up my reputation with investors so I keep refining my pitch and keep sharing these assets in terms of the potential and the opportunities around them? Just focus on one deal at a time, and focus on, the fact that if you're going to wait and try to get commissions and then fund your real estate deals, it's such a long road. And I've tried it, partners, LP partners, if you're going to want to grow in commercial real estate, it's a fundamental aspect of the business. You're going to have to get through that immediately and start the process and work on that process of raising money, no matter who it is. The more money you can put in, the better. Makes me feel better. If you were to pitch me and I were to invest with you guys, any money that you have or skin in the game is a plus, but focus on the fundamentals. I have a real simple filter that I look through on my entire organization for, in raising money and buying property and real estate. I call it, it's like, I use an acronym. It's AID. So acquisitions, highest quality acquisitions. D is debt, making sure You're building the right relationships with your local banks. I can share how to do that if you haven't done that. Equity, you got to start planting the seed. Who in Commercial Academy or who in your local network is interested in investing in industrial buildings? And then on the bottom side of the deal filter, you're looking at it's core construction or CapEx. Who's going to be the people that are going to help you improve this asset? The O is operations. Who the heck is going to run it? And then the R is reporting. How are you going to report on it? So if you look at that, you look at the A and the core, that's going to give you every aspect of this game that you need to master, for the rest of your career. So that's really important that you just focus on being great at the game and don't even think about lifestyle or don't think about, retiring or any of that. The closer you think you are to a finish line, the worse you perform. If you've ever seen in sports, when you think you got the lead in hand and then you see that other team is just getting momentum, Patriots against Atlanta, 28-3 in the Super Bowl. We all remember it. You thought you won the game and before you knew it, the Patriots are raising it up. And that was a beautiful day for me. That was the best Super Bowl I've ever seen in my life since I'm a Patriot fan. So I just want you to keep that mentality where you keep your foot on the gas. Don't ever think about, turning it into some lifestyle cushy business here.
No, definitely. And just to clarify what I meant, I guess more of what I meant is just having a smaller team with a smaller portfolio. Cause Jesse and I, we're not afraid of work. We're grinding. But I guess just like having a larger organization and a larger portfolio and more investors versus having like a smaller team, smaller portfolio. So like it's just two different styles, it seems like. And that's kind of what I meant. But
I get your question, Graham, too. And I'm thinking, though, like, look at the problem that you're trying to solve for in terms of you guys building generational wealth in real estate. And don't think about how am I going to build my team to get to solve that problem. Look at buying assets and building up your portfolio and then building the team around the opportunity and the assets and the business that you grow.
God,
so if you find that, right? Mm-hmm. So if you're looking at getting a portfolio of warehousing and you can't turn down deals, you have to build the team. Like you have to. But if you aren't finding the opportunities where you're delusionally doing deals to share that you have a lot of assets under management, you're growing and you want to talk at Commercial Academy and promote yourself through ego, you're in it for the wrong reasons. Yeah. So that's where the mistakes happen, is just focus on the fundamentals that I shared in the deals, and the team will naturally grow to the size that you need.
Yeah, definitely. Okay, that's great. That's great advice. It looks like we got a couple minutes left before, the 30-minute mark, but you mentioned you could share how to approach your local bank. Would love to hear, what you'd say about that.
Yeah, it's a good strategy. I read this when I first started real estate. I read this cheesy course that my dad had in his attic. It was called No Money Down by Carlton Sheets. And it was just an infomercial type thing. And when I read it, one thing that stuck with me my entire career is you guys are in Raleigh?
Yes.
Mm-hmm. Raleigh, Durham. Yep.
Yeah. So start to look around and talk to credit unions and your regional banks, not the Wells Fargos of the world, the small banks in your market, and tell them what you're doing. Say you're a commercial broker, you're buying warehouse now, small bay warehouse. It's typically under a couple $1 million loan amounts, maybe up to $3 or $5 million in deals. And you're looking for a bank to build your relationship with so you can get financing when you find them. So you want to find out what their parameters are and that they do like the asset class, that their parameters are competitive, that the loan to value is 70 to 80%, that their rates are fair, that their amortization is 20 to 25 years, something just fair. And then once they confirm that, we like that asset class, we like the market, we do want to lend on commercial real estate, you may be young and you don't have a track record, but you're building it up and you're in the business. At that point, when you know that you have a good feeling around the bank and they want to lend on your asset class, take a CD out. Say, hey, I want to get a personal loan. I want to get a personal loan with you guys. And when you're young, typically they don't give small business guys or, guys that don't have any existing history with them, any personal loans. but they'll always give you a collateralized personal loan. So go in and say, I want to buy a $5,000 CD, and then I want to get a personal loan that's collateralized by it. So now you're in their system. So you're a borrower from them. And then, make it over the same period of time as your CD. If it's a 1-year CD, make it a 1-year loan, or a 2-year CD, 2-year loan. And they're going to give you the loan every time because they have the CD as collateral, but now you're a borrower in their system, and you're borrowing and you're making your payments. And then when you need lines of credit in the future, say, hey, but your brokerage, you want a line of credit for making improvements on your assets, they'll look at you like, hey, you guys are young in your 20s. These guys have been banking with us for 5 years, 10 years, 20 years. That is a huge relationship that with very little money, you can start that relationship. And even if they don't really understand what you're doing, just do it because you're in the system, and now you're making your payments on these loans, and you're a good borrower.
That's smart. I never heard anybody say that. So that's awesome. So you guys heard it here from Jeremiah first. Go get a CD and collateralize it so you can build a relationship with the bank. That's awesome.
I like that.
Yeah. Well, now, on the next time you have me on here in 6 months, I want to hear you did it.
Okay.
I like that.
Jesse, do you have any last questions for him?
Kind of curious to see what your opinion is on this. So recently I was approached by a family friend mentor on managing one of his storage facilities. He's bought it. He uses it to pay his business and everything like that, but he wants us to manage it. 10-12%. He's got no marketing or anything in it. It's definitely underperforming. Is that something that you would recommend us doing if we are looking to do industrial assets in the future and as a get our feet wet kind of thing? Is that something you would do?
Do you want to own storage?
We've definitely talked about it. Yes.
I'd get clear on that.
Okay.
If you want to, I don't disagree with the strategy of having small bay and storage as your asset classes. I wouldn't go more than that to focus on right now on your investments. But if it's something that you want to commit your career to and get clear on why, and read my book, and there's a bunch of other books I can share with you.
Yeah, I'd love to hear
then,
those.
I think it's an outstanding opportunity. I think that you will learn so much from that process, and it brings in revenue, that reoccurring revenue that you could use, I'm sure, as you guys are brokers.
Definitely.
That's a great opportunity.
Okay. Yeah, that was our line of thought. Obviously it's not the exact same as industrial, but they're in the same umbrella. So we were thinking maybe we'd want to get into self-storage because it's close to small bay warehouses. But I agree, they're not the same.
I do want to share. It is a trade-off. So remember, everything you say yes to means you have to say no to so many other things. So just get clear on that if you do want to do this, you're going to have to defer gratification. You're going to get tired of it. Yeah. It's not a lot of fun, and you're going to, over time, I'm sure you'd rather be doing other things.
Yeah.
So be clear on the sacrifice that you're going to make. But I have to tell you, if you do run that facility for the next couple of years, or if you can even work out something where you get an opportunity to buy it someday, that is going to make you so knowledgeable where when you are talking to storage owners, you're going to be able to build rapport because you actually managed and ran one, and they're going to appreciate that. You're going to see things you never saw before. And in my career, I've owned apartment buildings, retail buildings. I owned a wine store and liquor store here in Vegas with gaming, with slot machines. I've owned gas stations. I've owned office buildings. I've owned large industrial, massive, tiny retail, tiny industrial. So I've tried them all, and it made me a better presenter, a better prospector, a better salesperson, a better capital raiser. But I just don't want to see you guys doing a ton of different things because then you're never getting that traction I talked about, where if I could go back and I could change my career, I would have, I learned from everything and I'm glad I got to where I got, but I would have just stayed on one or two asset classes and I just would have just stuck with it and just kept pushing through instead of jumping to something else.
That makes sense.
Yeah.
That makes awesome sense.
Okay. Important.
Well, thank you so much, Jeremiah. We really appreciate your time. what's the best way for the people listening to go connect with you?
Yeah. At patriotholdings.com, and then Finding Your Edge, How to Win at the Game of Commercial Real Estate. I hope the Audible book has been out for a while. Love to have you guys listen to it, see if you like it. And obviously social media, you can put my stuff in there in terms of the social media links, Instagram, Facebook, all that stuff.
Yeah.
But yeah, I'm writing 2 more books now. One's about, it's called The Real Estate Edge, the playbook. So it's really about the 22 plays that I learned over the years about how to be creative in commercial real estate. And then The Real Estate Tax Edge, about some more sophisticated topics on tax strategy with investing in real estate. And that's always changing. So check out the books.
Yeah. We will for sure. Finding Your Edge is on my book list right now. But give us a quick, 20-second summary of what that's about exactly.
Yeah, that's the story. That's the start of it all. Everything I shared, but I expand on it. Of just, most importantly, it was me evolving as a business person, where I had to learn the hard lessons, and I chose real estate, but it was really about being dependable, being accountable, being responsible, and handling problems head on, really dealing with them, not running away from your problems, being resourceful and creative and different, especially in times where it's always competitive, or you're in tough times with lack of resources, and finding a way to be resourceful. And then the journey of, raising the first capital and finding the first deal that I got seller financing on, where that gave me enough passive income, that $3,000 to $5,000 a month that I could get out of the real estate agent game. And it's just the evolution of the story. So I think it'll resonate with you guys.
Awesome. I'm excited to listen to it. I am.
Good.
Yeah. Thank you so much, Jeremiah. Have a great rest of your day, and hopefully we'll be seeing you soon.
Yeah. In 6 months, you better have a CD opened up.
Okay. I'll let you know when we do.
Yeah.
All right. Thank you.
All right, guys.
Bye.
Thanks, man.
Yeah.